Nizam Idris of Macquarie joins in. Nizam, hi, good morning. Was just asking our previous guest what kind of immediate impact you expect to see both on the currency market and the Indian bond market this morning.
Right, I think the immediate impact is quite clear. The rupee is going to strengthen from this simply because it sends a message to the market that the RBI is intent on curbing rupee weakness. But at what expense, basically, in my view, I think it is going to hurt the economy because liquidity will tighten. But obviously, you know, it depends on how the RBI is going to manage short-term liquidity as well following these measures. So, yeah, it's going to be pretty unclear immediately. There's going to be volatility in both the FX market and the bonds market. But I think the easiest thing to say, at least in the very short term, is that the currency is going to appreciate at least in today.
Morning, Nizam. Would you be recalibrating your growth expectations now on the way down in the light of what's happened? I mean, could this have ramifications for all asset classes in India which are connected to growth?
Well, to be very honest with you, I'm surprised by the measures taken yesterday because really, you know, you are taking a risk at hurting growth further while trying to curb the currency from weakening at the same time. Now, if you remember on Friday, the data that was released, like industrial production, manufacturing and mining contracts, for example, they are all suggesting that the economy is decelerating. So, yeah, I mean, in my view, our 6% growth forecast for this year is already, risking to the downside. And with this, I think, yeah, I mean, I'm likely to revise my growth forecast lower. But you know, I'm interested to see exactly what it means for the repo policy. It doesn't automatically mean that the repo rate would have to be hiked, but I think the chances of that, of further cuts from now, would be much lower.
Thanks, Nizam, for joining in with your thoughts.